Chapter 3. Beaming. Hi guys, and welcome to a new episode on this channel. Today, we will be talking about in the bank. So how about we get started? A lot of people like to think this, that whenever you're giving money to your bank, to your local bank for safekeepings, you like give them the money, and and then the bank will get a separate box for all of your accounts, and then put your money right in there. But it's not like that. Usually when the people actually get all the money that they're loaned into the bank, they don't just put it in a separate box. Usually they just put it all the money with the other money. And then this literal money looks like a pool, so it's actually nicknamed a pool of money for the bank. And now it's all the money is now one money. It's literally the bank's now. So what would the bank do with it? Well, there's a lot of ways that the bank might use this money, usually to upgrade the businesses or do other things. But then there was a problem here. Somebody wanted to create this company, start this company, and then the bank gives them $50,000. But the guy was like, that was too easy. How did you get the money from? And they're like, we just made it. And so they did just made it, but just like that, from nowhere in space. Just like that. But then there's a problem here. Whenever you were loaned something like an IOU paper note, and then you wanted your own money, physical money back, but the banks spend all that money on their own debts, then everybody would stop trusting the bank because they already lost, because the bank is trying to hoard up as much money as they can so they can repay everybody else. And then things start getting complicated. Now, that's actually how it works. Eventually, a crisis happened. In the years before 2008, a commercial bank decided to do a pretty big risk. Here's a simplified version of the story. Commercial banks started offering mortgages so that people can buy whatever they wanted. Eventually, they gave out small loans as payment for them. Eventually, all these companies realized it and mixed in other loans with those small loans they were owned and started using that to pay their own loans. Eventually, those people actually just got rich quick. Eventually, people got so expensive, in fact, a lot of things happened. They could even do double of their wild dreams. But then houses started going prices down. And then people no longer had enough to pay for their mortgages. So that was how it ended. The banks eventually stopped giving out loans. Businesses closed. And people had to move their houses and lost their homes. Yeah, that was a bad crisis. And eventually, by the mid-2008, the bank had lost so much money, in fact, that everybody decided that banks were useless. And that these taxes, whenever anybody could pay taxes, but whenever a bank was not going well, the tax of the money was all given back to the bank. And everybody hated that because they were helping the bank when the bank didn't help them. This is where the banks start going out throughout the world. And this is the end of chapter 3. So I guess you already see the problems of the bank now. Now that you see the problems, how about we actually experience the problems themselves? So this is the end of this episode. If you enjoyed this episode, please like, share, and subscribe to the channel if you haven't already. I'll see you in the next episode. Shanhan out. Peace.